Okay, welcome back everyone. Now that we've identified our zones on the daily and weekly time frame, as well as our trend lines on the daily and weekly time frame, next thing for us to do is to identify our trend origin. So what's a trend origin? A trend origin is the point in price where price switches from an upward trend to a downward trend, or from a downward trend to an upward trend. A trend origin, as the name implies, is the beginning of a trend. But more often than not, a trend begins where another one has ended. Of course, there are times where a trend might begin after preceding a range of some sort. But even before the range, usually price was going in a bullish move before switching to a correction and before switching to a bearish move. So a trend origin is the point where a trend starts, but it is also described as the point where price switches from one trend to another trend. That is to say, from an upward trend to a downward trend, or from a downward trend to an upward trend. You can see that price switched in our current case study of BTCUSD. Price switched from an upward trend to a downward trend. Price was originally coming from an upward trend. Let's go back a bit. You can see that price was originally coming from an upward trend. Before I go to this red box that we've identified here, and then since price entered this red box, price has switched from being in an upward trend to being in a downward trend. Price has switched from being in an upward trend to being in a downward trend. So that's how we identify our trend origin. Now that we identify our trend origin, the next thing for us to do is to identify our market structure. So let's identify our market structure. Our market structure goes something like this: impulsive, correctional, impulsive, correctional, impulsive, correctional. So price is still in the middle of a correctional. That should be followed up by a new impulsive move. Now let's identify, let's mark out our swing highs and our swing lows. So this is my swing high, also known as my lower high, because we're currently in the downtrend. This is my swing low and my lower low. This is my swing high. This is my swing low. This is my swing low or my lower low. Now, typically, I would identify this as my lower high, but in order for price to continue in a downtrend, price must continue breaking highs. In order for price to be in a downtrend, price must continue breaking lows and not highs. So since price has yet to break another low, that means that this low is not yet confirmed. That is to say, it is not impossible for price to continue to that is to say it's not impossible for price to continue going higher above this low, this confirmed lower high, before coming down for our next impulsive move, which is why we have it identified as our unconfirmed lower high. Because until price breaks the lower low, that lower high is not yet a valid low. It's not yet a valid lower high. So now we've identified our trend origin, as well as our market structure, that is our swing highs and our swing lows, our lower highs and our lower lows, because it's a downtrend. The next thing for us to do is to take a trade off of this market structure.